Pasman, UNIONHOME, Morgan 08, East Grand in historic downtown Laramie. Dan Pasman, good morning.
Morning. How are you doing today?
It is wonderful to be here, delightful in the Gem City, and we are we're looking forward to how do we improve our credit score generally.
You know, it's interesting. We've done a couple other sessions other than today, and we've talked about a lot of different things. We've talked about ranges of credit scores, how you get a credit score, lines of credit,
the importance of getting your bureau.
Yep, get your
each
bureau.
year.
Yes, making your payments on time, keeping your credit card balances under a 30% mark if you can, limiting credit inquiries, don't closing old accounts, making sure you have enough balance on your credit cards. We've talked about a lot of things like that. So, it's kind of like where does all this start to factor into how do I make this useful? One of the biggest things, especially when it comes to credit, is how you use it. Big thing is that you hear in banking in general is debt to income ratio. Debt to income ratio is how much you make versus how much you spend on a monthly basis. In banking, when we look at a debt to income ratio, we're primarily looking at items that are repeating credit report items. We're looking at car loans, student loans, credit cards, house payments, those things of that nature to determine a debt to income ratio. And what we'll do is we'll divide those types of monthly bills against your gross monthly income to figure a debt to income ratio. Now that's where that debt to income ratio a lot of times can get very misleading with people, because one of the things I hear very commonly in my business is that, wow, that's way more house than I ever thought I could qualify for. But you got to remember, as I explain to people, I'm doing this on gross income, not net income. Because in general, we only bring home 65% of what we make every month.
Everything else is tax law.
Tax, health insurance, retirement, and all those things that come out of your account. So you got to make sure that you're balancing things correctly, because on the debt to income ratio, I can be as high as a 45%, in many cases 50% debt to income ratio on repeating monthly credit debt is where I can be on and get you approved at. But you got to make sure in that other 15 to 20% that you can afford your car insurance, your cell phone, your utilities, your groceries, any type of medical expenses. So it's really important that you measure what you're comfortable with versus what I tell you can afford. The big thing I point out really quickly is it dependent, medical costs. Do you have, medicines that you're required to have on a monthly basis? Do you have a diabetic in the family that you have your monthly medical expenses are higher than normal people that you can't, that you can only afford so much when you balance that out? And that's also when it gets down to using credit cards, lines of credit and things like that. Your payment can vary on those types of financial instruments depending on how high you are on your credit limit. And so, making sure that you don't run those low credit limits up to basically make your credit card payments too high and things like that can really affect, your debt to income ratio and what you may or may not be able to afford. That'll affect your credit.
Dan, one question comes in from the audience, just got texted in. What is your perspective on the quick fix credit offers that come in, that you have $30,000 in debt, perhaps to the IRS? You might only owe $100, and there's testimonies that come in the ads and so forth on commercial radio. Is it your experience or observation that there are any quick fixes that fast?
When you get into IRS debt and things like that, no, there's no things that are quick fixes like that to come into play with it. Now, sometimes when you get into a case of someone, has a credit score and you need to bump it, maybe 20, 30 points, or you get in those types of things, increasing a credit limit on a card, paying a card down, those types of things. And there are some mechanisms out there like what they call rapid rescores and things like that that you can use to get a rapid rescore. And some of that stuff like that, when you're messing with, I'll call messing with very superficial things, you can get results in 30 days on some of those things.
Okay.
Now there are some things where people just need to let things rest for a while. You'll have late payments and maybe credit cards that you have gotten run up on limits.
Do your best to reset.
Just to reset. And that's the thing is I've looked at people's credit and they say, well, I says, yeah, I says your problem is you're going to have to let your credit rest for a little bit. You've got to get some space.
What does that mean?
You've got to get a little space between your last late payments and where you are currently to show that you've built some history back up that, hey, you're back on track. We're making payments on time.
And every month becomes more valuable in success of doing that. It's 3, 6, 9, 12 months.
Right. And I have some tools I've used on a few occasions, and they're referred to as a credit simulator. You can take someone who's had some credit issues, you can take their credit, and you can look at what paying certain things off, and what the overall effect to their credit score might be. Those credit scores can be very accurate. They can be very accurate, and they can be very useful in the churn to figure out sometimes if you need a short-term burst and how you balance that out with long-term deals. Because I've had some folks that you look at the credit, the credit analyst, they'll say I'll say they'll have a 580 credit score, but they'll say, well, you can get a maximum of a 23-point increase on your credit score on this bureau if you potentially. So you go in and you mess with the variables to see what gets you that 23-point jump. So you figure out get the 23-point jump. So you go from a 580 to the 603. Someone says, what do I need to do to get to the 620? Well, the simulator won't get you to a 620 because they've had too many late payments. And so that's where you come in. A lot of times I'll just tell people, I says, well, you need to let your credit rest. You need to build up some history and make sure you're making your payments on time, get some things pushed down the road a little bit. And then once your credit's rested, you'll watch it make the next jump.
What else can take you farther down the road to improved credit?
One of the things I was going to circle back around to the comment you just made was the IRS debt portion of this. Now, IRS debt is a completely different animal when it comes to the credit world. Typically, on a credit report, you will have a notation in there of a federal tax lien, and you have to get that federal tax lien released. Those types of things with federal tax liens, a lot of times, it does take some extra help on some of the stuff. I do have some folks I can call on to help with some of that stuff.
Might get you started.
To get you started, because a big thing with federal tax debt is that it's the interest they hit you with. So when you hear people talk about, well, I negotiated my number downwards, it's that interest that they negotiated. The IRS has a reputation for if you're gonna come to the table in full, pay the penalty in full, or where you're at, they will negotiate with you on the interest that is out there to be paid.
It's leverage situation almost.
You're right, and so you got to look at some options on that. And like I said, I've got some partners I've worked with in the past, and to help some folks with that work, because I will say that federal tax lien is the spot. Is that you will need some help. Now, and I would tell anyone, though, don't answer the 1-800 number on the TV when it comes to that type of stuff. Call me, call someone, maybe, face to face, and let us hook you up with somebody and connect you with somebody that we know is reputable and can help you out with that.
How many years have you been in the financial world locally or through your career, Dan, for those that might be just joining us?
I've been in business 19 years. 19 years. I started in December of 2006 right before the Great Recession started. I watched the jumbo market go away. I watched literally in motion the declining market values come into play, and where you had to cut appraisals 10% right off the top. And I remember one of the things in mortgage was when we look at stuff, we run everybody's information through what we refer to as an automated underwriting system. You'll hear also referred to as AUS. And to take that a step further, you'll hear on the news they'll talk about Fannie Mae and Freddie Mac. Now, Fannie Mae, we will use commonly mortgage. You'll hear the term desktop underwriter used, or DU is what we'll refer to it. And for Freddie Mac, it's loan prospector, or LP. So what we would do is we would run the desktop underwriter findings or the loan prospector underwriting findings, and it would tell you right in your findings, take your appraisal amount, cut it 10%. And it's like, whoa, what's happening here? And so I remember watching that full motion, and now then I watched COVID, and I'll have to admit, 19 years, it's never been a dull moment.
Never, always changing.
Yeah.
What is happening locally that you're excited about in Laramie, Wyoming, for people considering mortgage lending locally?
I'm excited for folks to, that have moved to town in the last few years. I think a lot of our growth in Laramie is a very slow growth. It's a growth that's hard to see sometimes, because over the years I've seen it many times. People will take a job up to university as a professor. They'll move to town. They'll rent a house. And they'll live in the house or an apartment 2 to 3 years, and they'll think, yeah, you know what? I think I'm sticking around. And then they'll come in and see me and get pre-approved to go out and find a home here in town. So I'm really excited for this year to see, the folks that have maybe moved to town the last few years and we're trying to figure out whether or not to buy, to decide to take the step and buy. And honestly, I'm excited to see, what happens up the university with, professor turnover and things like that, to see what it brings to town.
How about you just attended a grand opening yesterday? The Human Being of Laramie and West Laramie.
Yeah.
Not a mortgage situation, perhaps, for homeowners, yeah, but yet an exciting thing for the West Laramie neighborhood.
Oh yeah, no, that's awesome for West Laramie out there. Matt Lockhart, who owns the Human Beings, is my neighbor, and known Matt for a long time, and I'm really excited for him to get the second location up and going out there. It's a super nice location. He did a super nice job designing it.
Very spacious.
Very spacious. I lived in West Laramie for 7.5 years. I lived off of Truman Street over there, and it's fun to go back over there and see the way West Laramie has grown a little bit over time. And I can tell you this from living over there, the snowmobile business is huge for Laramie. When I lived over there, McDonald's was kind of like, the McDonald's and the Fly Store were the kind of, I'll say, the staple things over there where people stopped and stuff like that. And there's that big lot that sits on the south side of McDonald's. And you would go over there, I drive there going to work, especially on Friday mornings, sometimes Thursdays, and honestly, you would see it on Mondays when people leave it, and all of the trailers and the snow machines and all that stuff, and the money that would come through Laramie with those types of things, it's huge. So, one of the things Matt did a really nice job of is he built it, like, as you're just saying, this big spacious lot where people can pull their snow machine trailers in there, go get their coffee or whatever they're looking for to head up to the hills that day.
Load up and take you further down the road.
It was a great time to go out and support Matt and opening the next location. And
the Human Being of Laramie, they open 5 a.m. daily, yeah, and now in West Laramie, location number 2. Yeah. Fabulous. Congratulations, Matt and Davina, yeah, Lockhart, the Human Being of Laramie. In what was presented at the ribbon cutting, is obviously you being part of the photo of that ribbon cutting. What type of networking were you enjoying happening in people coming together to support this new opening?
Well, I mean, the thing about Laramie is, and one of the things I love about Laramie is we all need each other. That's the thing is that we talk about maybe the weather isn't the greatest here, or maybe it's a little far to this, but at the end of the day, what makes Laramie is that we have each other. We lean on each other, we support each other, and to be able to go out and support, Matt and Davina, my friends and neighbors, and and seeing an exciting new thing, and see more growth come to West Laramie in type of business development, things like that. It's exciting to go out with my fellow business people here in town, and see progress happen.
A lot of excitement in business growth, much potential in mortgage rates. What is the current climate of mortgage rates? Best credit to high credit ratings. What's the interest rates around that can be found? What's the range?
Interest rates are a really interesting thing. It depends on several different things. When I look at interest rates, we look at three things primarily. We look at what's referred to as loan to value. It's how much down payment you're putting on the house versus what you're buying it for. We start to look at things like, is it a 5% down? If you're at a 5% down, you're at a 95% loan to value. So loan to value is a big thing that we look at with credit scores. And another big thing we look at is your credit score. Where's your credit score come into play on things? Debt to income ratio is a less of a player on interest rate pricing, because debt to income ratio is kind of a pass fail. If you're underneath it, you're good. If you're over it, you're not good. So it's kind of one of those things and so when you start to look at those elements, everybody prices a little bit differently. So a lot of these interest rates that you will see advertised are a very wide paintbrush. What I would say is, on a conventional loan based on the market, I would say you're looking at the high fives. When I say high fives, 6% right in there. FHA loans. Now, FHA loans are less credit score driven. They're driven more by debt to income ratio in terms of whether you qualify or don't qualify.
And the actual property rating itself, right?
Right.
It's components of structure and age and so forth.
FHA does have a higher appraisal standard to it, and it has to pass FHA appraisal rules, and that gets into it too, is when the property. So there's two elements when buying a property. You have the credit component of the person and their credit worthiness, but then you also have the property, and both things have to fit the box to be able to lend. I've been in many situations over the years where the people buying a property is perfectly fine, but the property is the problem.
Dan Pasman with UNIONHOME Mortgage this morning with credit tips. What else did you prepare to bring to us that we haven't shared just yet in our tips together today?
Oh, today, what I would say is that, if there's anything that someone has heard in the last, 3 sessions we've done that's kind of piqued their interest, maybe I should take a look. Do I become a home buyer? There are a lot of first-time home buyer programs out there that are available to people at all credit, income levels, things like that. Right now is the time of season. Go look at getting pre-qualified to maybe take a look this year and see what options might be with where you're at down payment. And a lot of times too, at this time of year, I always encourage people, take a look, because we would do the work now, and then this summer, you might look at being a buyer.
Are there credit counseling programs or classes, perhaps, that you might recommend individuals consider?
There are a few nonprofits out there that do some credit counseling. Like I said, I like the nonprofits because they don't have a dog in the fight, where some of most of the people they want more money out of you. Now, there are a few circumstances that some of the companies are better than others, that people have been so complex that maybe someone that pay for service, a good pay for service, has been good for them. But they're out there.
Are there state nonprofits, federal nonprofits? Are they each subsidized by the same type of funds in terms of their operations that make them successful nonprofits, in your opinion?
My knowledge on it is I don't think there's a difference in where the funding comes from. I think it usually comes from one spot. The Wyoming Housing Network is really good. They do the first-time home buyer education.
Is that the Wyoming Community Development?
Well, they work with the Wyoming Community Development Authority, also referred to as WCDA. they work with them. They provide the home buyer education program for WCDA with that. Also, the Wyoming Housing Network as well. There's a program that's located in this. Actually, it's here in this building with you. It's called My Front Door, and they provide the home buyer education. It's an online course for the My Front Door program as well, and has done a really good job of helping educate home buyers in the state.
If you're just joining us, Dan Pasman, our guest from UNIONHOME Mortgage. Today's credit tips. Also, importantly, part of our program is the benefit of nonprofit information. Albany County Relay for Life, daffodil and tulip sales are coming to a close with their pre-order deadline this Friday, February 13th. And you can get a hold of Pam Brecken, 760-4753, to make your order, supporting Albany County Relay for Life and the American Cancer Society. Dan Passman, UNIONHOME Mortgage, available in historic downtown Laramie, 208 East Grand Avenue. And Dan, your phone number, do you prefer the office number or your cell in your area sales management locally?
Don't matter to use either one, because guess what? If I'm not in my office, they both ring to my cell phone.
They both ring to the same place. So 307-223-8852. That's 307-223-8852 for Dan Passman, UNIONHOME Mortgage, our credit tip advisor today on the Talk Shop. Thank you, Dan.
Thank you.